Let's do a class example. The debtors list of Hockenheim traders indicate the following on 31 December 2012. Verstappen had an outstanding balance 10,000, Scheckter 15,000, Hamilton 10,000, Vettel 15,000, Schumacher 20,000, Montoya 30,000, and Button had a credit balance of 5,000. So if I add everything up, it gives me a total of all outstanding debtors of 95,000 Rand. Then the question states that management does not expect debtor Verstappen to settle his account. There is currently no balance on the allowance for credit losses account. Now, what is important is these words, they do not expect. So it's not for certain. If it was for certain, I had to write off his outstanding debt. Now I only have the gut feel that he's not going to repay his outstanding debt. They want from you to show the journal entries required to ensure that debtors are shown at the correct amount in the financial statements. Journal entries or narrations are not required. Journal narrations are not required. Journal entries are required. And then the B part indicate how debtors should be presented and disclosed in the financial statements for the year. Now, the alternative that they want you to show is a standard allowance for credit losses. But let's do the first one first. We are at year end. We expect that Verstappen, who owes us 10,000 Rand, is not going to settle his bill. So we don't want to remove him out of our debtors book. We don't want to remove him from our debtors list. All we want to do is to make sure that our debtors are shown at a fair value in the financial statements. So what are we going to do? We're going to create an allowance for credit losses. What is his outstanding balance? 10,000 Rand. We are a VAT registered VAT vendor, and we assume a VAT rate of 15%. So, if we go back to this one, we say that his outstanding loss is 10,000 Rand, but how much of that loss will come out of the back pocket of Hockenheim? Only the VAT exclusive part, because eventually if we're going to write off that debt, we will be able to claim back the VAT. So therefore, when we're going to create the allowance for credit losses, it will only be for the VAT exclusive amount. So 10,000 divided by 1.15, which is 8696. So therefore, we're going to debit our credit losses expense account, 8696, and we're going to create an allowance for credit losses, and that obviously, is a statement of financial position account, 8696. Now the alternative, what they've said is that we must do exactly the same, but let's assume that instead of just identifying one possible expected loss out of our list, we don't expect anything, but it is our policy to create an allowance for credit losses equal to 10% of gross debtors. Guys, in the test exam, I'm not going to add this sentence. I will stop right there. Now, the first thing that you have to ask yourself, what is gross debtors? Because remember what does IAS 1 require you to do? It says whenever there are debtors balances or debtors accounts with credit balances, I have to transfer the credit balance to creditors. So what now? Now Button's got a credit balance of 5,000 Rand. So what is the actual amount of debtors? 10 plus 15 plus 10 plus 15 plus 20 plus 30 equals 100,000 Rand. Or 95 plus 5 equals 100,000 Rand. So that is our total outstanding debt of our debtors, 100,000. 100,000 times 10% equals 10,000 Rand. But now again, should any of these go belly up, I will be able to claim the VAT back from the receiver. So our total outstanding debtors is 100,000 Rand. I take out the VAT out of the 100,000 and then I multiply that by 10% equals 8696. And then again, our entry is the same. Debit credit losses and expense account, 8696. Credit allowance for credit losses, statement of financial position, 8696. Good. Here's the same calculation. If I take out the VAT, VAT at first and then multiply by 10%, gives me exactly the same answer, 8696. Then they want from us in the last part of the question, show the journal entry if Verstappen is declared insolvent on 15 January 2013, so the next financial year, and management receives confirmation that he will not be able to settle his account. So he is now actually insolvent, so we're going to write off the 10%. Oh, I had to do the disclosure. Let's do that one first, and I'll come back to the disclosure. Credit losses. Now, it's actual bad debts, but that's an ugly word. So, in actual fact, the fact has realized now that we're never going to collect this outstanding debt. So, we're going to debit credit losses and expense account 8696. We claim the VAT now because we can. Debit VAT input 1304, and we're going to credit debtor Verstappen's account with 10,000 Rand. But remember that we have created an allowance for credit losses at the end of the previous financial year. Yeah, allowance for credit losses. Let's go to that one. And that was specifically created on Verstappen's outstanding account. So we sit there with the 8696. So what are we going to do with that? We're going to clean it out. And how are we going to clean it out? We have to debit the allowance account, and we will credit our credit losses expenses account with 8696. So what did we achieve? There is no income or expense item. Why not? Because we have already recognized the expense at the end of last year when we actually created. There, we've created an expense account. So we've already recognized the expense in our books. We cannot do so again. Oops. So therefore, credit losses is out of our books. Then we have written off his account. There's no outstanding debt for Verstappen anymore. We've credited his account with a full 10,000 Rand. We've claimed the VAT on the amount that we've written off, and we have cleared the allowance for credit losses account 8696 that no longer exists anymore. Now, when you have a question where there is a standard percentage that we're going to provide as an allowance for credit losses, you do not have to do this part when you're going to write off the debt. You will only do that part. At the end of the year, when you're going to adjust your allowance for credit losses account to whatever amount is that you want now, you will pass the adjustment entry against your expense account. And then you will see you're going to have an allowance for credit losses at the balance that you need at year end. And you will see whatever you're going to pass against your credit losses account, that and the existing amounts already passed against that account, that will now pull right, and that will show the correct amount that you should show in that financial period as a credit loss expense. Now, in your textbook, there's nice examples of that. Please work through that. I just want to go to the disclosure of this. At the end of 31 December 2012, that is just after we have actually created the allowance account. On the face of our statement of financial position, and please look at the layout, the name of the entity on its own line item. Then, underneath that, what kind of statement are we working with? Statement of financial position as of 31 December 2012. We will have a column for note indications. We will have a column for what year are we working in. Again, you're going to write 2012. And in what currency are we working in? We are working in rands. Under current assets, trade and other receivables, note and an amount. Now, let's go and check that amount out. Again, your notes have a proper heading, Hockenheim Traders, notes for the year ending 31 December 2012, 2012 Rand, and then note number 7, trade and other receivables. Trade receivables equals 100,000 Rand, guys. 100,000 Rand. Go to the question. Not 95. The actual amount of debtors was 100,000 Rand. And then the allowance for credit losses that we have created, that was an amount of 8696. And that we're going to deduct against our 100,000 Rand. 8696, but I have to disclose it properly. So the net amount of trade and other debtors that we actually calculated is 91,304, and that is then that 91,304. Under current liabilities, trade and other payables, that 5,000 rand, guys, is the outstanding debt of Button. That credit balance that's lying there. There it is, Button, minus 5,000 rand. So that's a trade creditor, and that should be disclosed under current liabilities, trade and other payables, 5,000 rand, and then like you have a note for trade and other receivables, you will have a note for trade and other payables, that you will have trade payables, 5,000 rand.